Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan, good to have you with us here at ausbiz. So let's check the local market, well not actually the local market, let's check what happened on overseas markets overnight, beginning on Wall Street. Look, that actually fell, the US dollar strengthened at the same time as investors looked to the release of Nvidia's earnings results. After the bell, US stocks were lower at the close, with tech stocks leading the Nasdaq more than 1% lower. Nvidia shares fell around 2% before its quarterly earnings report was released. Those shares fell close to 7% when the report did drop, with investors unimpressed by its forecast for adjusted gross margin of 75% plus or minus 50 basis points in the third quarter. Second quarter revenue for the company was at $30 billion, beating estimates, while it's forecasting revenue of $32.5 billion plus or minus 2% for the third quarter. And the company is planning an additional $50 billion share buyback. Elsewhere, Supermicro Computer shares tumbling after the AI server maker said it would delay the filing of its annual report a day after Hindenburg Research disclosed a short position in the company. HP beat Wall Street estimates for third quarter revenue, marking its first quarter of revenue growth after 8 consecutive quarters of decline. CrowdStrike cut its annual revenue and profit forecast as demand for its cybersecurity products takes a hit from that global Windows outage caused by a faulty update from CrowdStrike last month. Salesforce beat expectations for second quarter revenue and profit as the business giant benefited there from higher spending on its enterprise cloud products. Shares more than 4% higher in extended trade. And the market value of billionaire Warren Buffett's Berkshire Hathaway hit $1 trillion for the first time. Elsewhere, shares of Foot Locker plummeted after reporting a second quarter net loss of $12 million, and shares of Abercrombie & Fitch suffered a similar fate, despite lifting its annual net sales forecast. And US listed shares of BHP and Rio both down. Well, there was little significant economic data overnight. The preliminary estimate for US second quarter economic growth is due later this week, along with the Core Personal Consumption Expenditures Index. That's the Fed's preferred inflation measure. US Treasury yields were little moved after an auction was well received by the market. The yield on the benchmark 10-year note was at 3.84%, the 2-year at 3.87%. Investors have now completely priced in a rate cut from the US Fed of at least 25 basis points at its mid-September policy meeting, with expectations of a 50 basis point cut sitting at around 36%. The US dollar has strengthened further due to month-end buying for its largest percentage gain since mid-June, although the greenback has lost around 2.8% this month. And the Aussie, trading near an 8-month high against the greenback. That's after data yesterday showed inflation slowed to a 4-month low in July, marginally less than economists' forecasts. And the Aussie is at 67.9 US cents. Well, let's get across all those market moves now. Ira Epstein joining us from Linn Associates. Ira, very good to catch up with you. Of course, it was all about Nvidia. It's a real market mover, isn't it? So, what did you make of the result?
It's a beat on everything. There's nothing they didn't beat on. The problem is the market expects so much and they've given so much. So it's a combination that every quarter for the past 2 years, the stock has just gone bananas. And they came in again, as you said, great numbers, everything looks good. I think one of the code words was Blackwell when we heard them in the after conference when they were talking, saying that they've sent out samples. Samples are not the actual chip. So by sending out samples, Jason came back, the CEO, and said they don't expect a lot of shipment problems now. They will be shipping in the fourth quarter, didn't say when, and it'll be a strong year because of that for 2025. So the market didn't get what it wanted in blowout, but by any standard, this is just a stellar performing company. It still has 77 to 85% margins. That's
Plus, you've got that $50 billion share buyback as well.
That's nothing when you've got $3 trillion of value, though. So that's how the market looks at it. But I wonder if this thing could have gone up today because the market is just expecting so much. So now we've gotten a 10% correction. You were down just shy of 3% on the official close, and in the aftermarket, you've fallen about another 7% round figures. So, that's the first part that you're getting. The last place that the market stopped was near the $100 to $90 area. It may want to drift back there, and I think you'll see people come with their shovels and buy it at that point in time. I wouldn't go chasing it at this value. It could still slip a little bit more. I'd welcome that.
So, Ira, this is regarded as the bellwether for that AI thematic
Right.
that's playing out at the moment. So, more broadly, what do you think the market's going to take out of this?
Well, let's talk about what September brings. If you go back since World War II in the S&P, it is a down month for the month of September. It loses to about 3/4 of a percentage point. In today's parlance, that's one day's move. You know that, I know that. But it's not a strong month, is the important thing. When you look at the futures contract of September and you go back the past 15 years, if you bought at this time frame and you got out September 15th, it has produced a profit every year for 15 years. So I'm not looking for a big break. I am not looking for a big rally. I am looking for a consolidation month. I'd love to see it come down rather than go up, because I think you're still going to get your Santa Claus rally out of the market. I think retailers will do well. If you looked at the ports in America, they have been swamped as we keep bringing in products, because we know that whoever wins the presidential election, they're talking more tariffs. People don't want to worry about that. Also, strikes. We have longshoremen that can go out on strike at the end of September. So that's come in and we won't have that problem. Falling interest rates, inflation that is waning and coming down. These are all good things for America. But in the month of September, you can pull back. Be ready for that. Nothing grows to the sky.
You speak of inflation, Ira. Look, not a lot of data recently to trade on, but the market is looking forward to that PCE number on Friday. But, as I guess we've heard from the Fed, less concerned now about inflation, more concerned about jobs.
You hit it on the head. So I would put on a scale of 1 to 10 the importance of the PCE number, which I'd normally rate an 8 or higher, down to a 4 or a 5. In other words, I'm going to yawn at it. I hope it goes down, because it keeps the Fed saying, as the Fed chair said, that their focus now is on the labor market. And the number next Friday, the jobs market's going to be the important number. Anything over this 4.3 number will get people salivating with the idea that maybe they'll get a half-point cut at the September meeting, and anything 4.3 or under, I think, keeps the Fed at the quarter point. I'm of the opinion the Fed should stay quarter point, by the way, until I see that jobs report. And the reason is the Fed doesn't need to send a message. They've sent it. They're going to cut rates. They can do it in a measured manner. Inflation, they don't want it to rear up again. So what's the big rush if the labor market is holding steady? If the labor market weakens more, I get it. Then they'll go the half point.
Ira, that prospect of rate cuts next month has seen the US dollar come off quite significantly. However, just in the last couple of sessions has received a bounce. What's going on there?
Too much of a break. For those of you that are technicians, please take a look at your weekly charted Bollinger Bands. If you don't understand them, go to Investopedia. It's an algorithm designed to keep the market trading within it 95% of the time. On the weekly chart, you got under that and you got over it in the euro currency, and even on your Aussie dollars gotten up to it. So in Australia, what you know is inflation's not falling enough, so the government there, the bank, is talking, oh, should we not cut rates right now? Maybe we have to raise them. That gave you a bid. At the same time, in America, what's happened is that we've gotten ahead of ourselves. We need to get that 4.3 number. Otherwise, it's going to be, I think, measured cuts, 25 basis points. And come on, the reason you cut is because the economy be slowing. So I can see the stock markets wobbling here. That's why I'm saying that to you. I can see the dollar giving you a little bit of a bid, but I think at the end of the day, you want to be short the dollar, probably back up into the 101.50 area. Wouldn't surprise me, basis the September futures.
So as a result, you remain bullish then, particularly in precious metals?
Yeah, gold, just what you and I talked about last week. I said I thought gold would be the winner hands down, regardless of how this all comes out. And the reason is, number one, I thought the dollar would break, maybe make a run to parity. I wasn't too far off. If you take a look at where it did get down to, 150, right in that range, not too far away from it. Number two, the falling interest rates. Number three, inflation that won't fall out of bed. So I think that combination is a winner for gold. But it's interesting that Bitcoin and the other cryptos did not run with the gold market. They seem to have broken apart in the short term.
Yeah, interesting to see what's going on in the crypto complex at the moment. Ira, terrific to get across all those market moves. Thanks so much for joining us from Linn Associates.
Thanks for having me.
So that's the global picture, particularly with the focus, of course, on the US there. Let's take a look at the local market just ahead of our market open here. SPI futures down around 0.25%. So we are expecting to add to those losses that we had yesterday. As you can see, just sitting above 8,000 there. And of course, the focus being very much on those corporate results. Already had a number of them out this morning, including Wesfarmers and Qantas. We'll get right across all of that in just a couple of minutes' time.